Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Independence Day week here from the Financial Exchange. It's Mike, Paul, and Tucker with you on a Monday of a shortened trading week. We have markets that will be closing, obviously, on Friday in observance of the Independence Day holiday, but also at 1 p.m. on Thursday, July 3rd, we will have equities closed on the New York Stock Exchange. So very shortened trading week here. We've got some economic data that we'll be pouring over as well. We have some speeches from Federal Reserve members, including Jay Powell, who will be going tomorrow. We've got some construction spending data, and then really it's a labor market week. So we have the job openings, labor turnover report, that JOLTS report that we frequently report on, coming out tomorrow. ADP employment coming out Wednesday, and then Thursday we're just going to get slammed with labor market data because the typical Friday jobs report is coming out a day early on Thursday at 8:30. We'll also get the weekly jobless claims numbers coming out on Thursday morning at 8:30. So tune in on Thursday. That will be a heavy labor market day to cover and work through. But before we go any further, this week we have the big, beautiful bill also being worked through in the Senate as we speak. We just had Scott Bessent, the Treasury Secretary, speaking on Bloomberg about said bill. And we're starting to get, I guess, a bit more clarity as to what this thing might actually look like when all is said and done. Suffice to say, though, it can still change here as the Senate works through their vote-a-rama, I think is how they term it, on what's going to be in, what's going to be out. But your take, Paul, I guess, on the likelihood of this getting done. It seems very likely that something gets passed to me.
I think that that seems to be the case. A lot of the major issues seem to have been ironed out. The vote that they had over the weekend, I believe it was a 51-49 vote that was conducted through the Senate, and now it will move to the House later this week. Is that right in terms of the procedural?
That's the idea
of it. And it seems like some of the big hang-ups were included the SALT, the state and local income tax cap that was bumped in this proposed bill from $10,000 to $40,000. We'll get into some of the nitty-gritty as the show goes on, but it does seem like that is what is going to happen is it's going to get passed. But the question that I'd like to maybe kick around, Mike, is this idea that got posed to me on one of the radio calls that I did this morning, that by having these cuts, we'd see GDP growth commensurate to the cuts in place. Just posing the question. And I think it's something that's worth spending a little bit of time on.
GDP growth, what, in relation to the number of cuts that are being done on taxes? What's the question?
Some politicians suggesting this idea that by having these tax cuts in place, you're going to get more economic growth that's going to pay for the tax cuts. And so it's
never have, never will.
Yeah. Well, that's a short way to look at it. But I'd like to expand on it a little bit more on this. The short of it is, first of all, these aren't going to be tax cuts. This is going to be for the marginal income tax bracket rates. These are just staying the same that they've been since 2017. So that's one thing that's important to note. You're adding to the deficit, but you're keeping rates the same. And we can talk about in a moment just the maneuvers that they're utilizing in terms of extending these lower brackets. But historically, if you look at economic evidence out there and any type of analysis that if you cut $1 of taxes to the American person, whether it be Mike or myself, it does not translate into us spending that full net dollar that we're getting as a benefit from tax breaks. Perhaps 20 cents of that dollar or a certain other percentage goes to me spending more or Mike spending more to boost income growth. But whatever you look at from an economic study standpoint, it is not a dollar for dollar benefit that you get. You might get a short uptick.
Furthermore, Paul, even if you did spend every penny of it, it's unlikely, for instance, that every dollar that you went and spent would stay here in the United States and contribute to U.S. GDP.
True.
So, if you even went with that assumption that, hey, tax cuts put dollars in people's pockets, people turn around and spend them, which they by and large do, they're usually buying products rather than experiences, and a lot of those products are made overseas. They might be sold here, they might be sold by Amazon, which gets some, boost to GDP, but ultimately a lot of those end up in China or in other parts of the world, which I know through tariffs the president is also trying to rectify, but the entire premise is a bit baked.
Right.
Now, here is a fair thing to say. In the absence of this tax bill getting passed, tax rates would shoot up pretty dramatically for 60 to 70% of Americans.
I was surprised why it wasn't more than that.
There are just a lot of people that, don't pay taxes at all. There are a number of them that, so if the tax bills just went away entirely, then remember that the SALT cap that was put in place back in 2016 would disappear. So
true.
You would be able to, here in Massachusetts, there's a whole bunch of people who, if you're making like $200,000, you will actually pay less in taxes if the tax bill went away.
Makes sense.
But it's fair to question on the other side of that equation, hey, would we be faced with maybe a recession if the Congress did not extend these tax cuts? It's a reasonable question. I'm not sure you would get there, but it is a reasonable question to ask on the other side of that equation. Yeah, will these tax cuts boost GDP to the point of paying for the tax cuts themselves? Almost definitely not.
Right.
Any serious economist that's looked at it says almost definitely not, very unlikely to happen. Remember that the tax cuts that are being done here are relatively minor. They're getting a lot of play because you're talking about taxes on tips and all these other things, but they are relatively minor cuts compared to where we are today. Could you convince me that in the absence of this getting done, tax increases on the average American lead us into a slower economy where you could have a recession combined with tariffs and other things? Yeah, you could get me to that point. I'm not making a statement about which one I think is better for the long-term state of the economy because, quite honestly, the way that this is getting done and deficits are being ignored on this entire subject, I think really raises some questions about how you and I are going to end up paying for these massive debt bills that the United States government continues to run up. But in terms of what we are seeing in this entire bill, obviously the most important thing, you are extending the tax cuts from the 2017 Tax Cuts and Jobs Act, which are set to expire by December 31st for all income groups. That includes the current tax rates with a top marginal rate of 37%. Remember, not that long ago, that top marginal rate was 39.6% pre-2017. There's going to be a boost to defense spending in the Senate bill, more funding for immigration enforcement as part of this bill, ending a whole bunch of clean energy tax credits. So I'll be interested to see how this takes place. It's going to impose new taxes on wind and solar projects. But for instance, right, I mean, I put panels on my home back in 2020, I believe, and will that still be as feasible? When I was looking at a new HVAC system, there were a whole bunch of green energy tax credits that applied there to basically even out the cost of the project. Will it still be the case? Unsure. Tax deductions for tips, overtime, and car loans will be going into place, it looks like, but they won't last for very long. They're going to be in there for maybe 3 years, at which point you'll have this fun game again. Instead of a no tax on Social Security, it looks like we are going to be seeing a $6,000 per person tax deduction for senior citizens. So effectively crediting you instead of cutting the tax on Social Security, which makes sense given the process they're using. Big cuts to Medicaid spending. This has obviously garnered a lot of attention, a lot of questions about how this is going to affect rural hospitals and millions of Americans who are on Medicaid. So we will see how that plays out. Of course, this will have to raise the debt ceiling by some $5 trillion, prompting a no vote from Kentucky Senator Rand Paul. They will lift the SALT cap to $40,000 from the current $10,000. We'll talk about what that exactly means later. But and then having states pay for more food aid programs is in here as well. Raising the child tax credit, transforming the student loan repayment program, new limits on Pell Grant eligibility, taxes on college endowments, a lot of different pieces in this bill. Hence the voter rama that I described earlier. So we will see what makes it through, but these ones look fairly likely in terms of the changes that are coming via this tax bill.
The last one that I'll just sort of get in a little bit more detail on, just because it probably is interesting to listeners out there, that Social Security piece. So typically the standard deduction for a married couple is $30,000 that you can take off your taxes.
For a senior today, right?
For a senior. So I'm just talking married couple.
Married couple in general.
And then drilling down to there's an additional credit. There's additional deduction that you get today if you're over the age of 65. They are proposing to increase that to $6,000 a person above and beyond the regular standard deduction of a married couple getting $30,000. So you're
let me get this straight, like $42,000 in total standard deduction for a married couple?
Exactly.
It's pretty huge.
It's big.
Yeah, it's a big tax cut for retirees.
Yeah.
Let's take a quick break. When we come back, I want to come back to how we're going to cover all of this increased spending, because they are a whole bunch of tax cuts. That's next here on the Financial Exchange.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Well, we are continuing to talk about the Megabill, the big, beautiful bill that is working its way through the Senate as we speak. And as we do so, there's been, a lot of attention on the cost of these tax cuts. And again, to Paul's point earlier, a lot of them are not new tax cuts. These are extending the tax cuts that were passed in 2017 as part of the Tax Cuts and Jobs Act, and so are being looked at a bit differently in terms of their impact on the state of the overall economy. But to be really clear, the U.S. federal budget, when you take a look at things such as the government's own projections of where the national debt is going to go, right now, because this is the law on the books, it assumes that the tax cuts that were placed in 2017 will be phased out come 2026, meaning tax rates go up in 2026, which lowers the rate of the increase of the overall deficits. What the Senate Republicans are talking about doing here is pretty uniquely misrepresentative, but they're working through the budget reconciliation process. And there are a lot of specific rules when it comes to reconciliation, one of which is that you cannot increase the deficit over a 10-year budget window. So to dodge the Senate filibuster rule, which usually takes 60 votes, you have to use fast-track reconciliation, which forbids bills from increasing deficits beyond the 10-year budget window, and therefore only needs a simple majority. Here's what Republicans are doing. They are basically saying, which isn't really true, but what they're doing is they're saying, hey, look, the impact of this tax bill that we are passing actually does not have a budget impact at all, because all we're doing is continuing the current laws. What they're seemingly ignoring is the fact that the current laws say that these tax cuts expire on December 31st of this year, but it is pretty uniquely unprecedented in terms of the way that they're handling this. Because this tax bill, right, if you compare what they're talking about doing compared to the expiring tax cuts, it's a $3.8 trillion increase in the deficit over a decade-long period. But basically what they're saying is, look, don't count that $3.8 trillion because that involves, comparing where tax rates would be if tax rates went up compared to where they are right now. I don't know if I'm doing a great job explaining that. Tucker, do you have any idea what I'm saying?
Not at all.
Okay. Well, then I don't think I did a great job. But here's why it's a bit worrisome. So, again, to pass a bill without the 60 votes that you typically would need and avoid the filibuster, like I said, there are a bunch of specific budget rules that you have to follow. Here's how this kind of paves the way for things to be done differently down the road. Let's say you're going to use this new math accounting rule that the Senate goes ahead and goes forward with and nobody objects to. Here's what somebody else can do down the road. What would be the... So I would generally describe the boogeyman that Democrats use to describe Republicans would be tax cuts for the wealthy, right? Like that's a constant calling point. What's the opposite of Republicans for Democrats? Incentives for what? Free payments to all sorts of different groups.
Sure.
Would be how I would describe it. So, if you are Democrats and you really want to pass a new bill that gives, tax credits to wind, solar, and electric vehicles, right? That's the boogeyman for Democrats. You previously couldn't really do that via reconciliation because of these budget rules. Here's what you can do now. If this all works. Say, hey, we're going to have these new tax credits that are only going to be in place for 2 years. And we are going to expire them at the end of 2 years. And in the meantime, you get a new 50% tax credit for all EVs, solar, and wind projects. At the end of the 2 years, Democrats go back to the bill and say, well, we are going to make these permanent, but there's no real budget impact because these were current law. It doesn't matter that they were set to expire at the end of this year. We're going to extend this as current law. And so now tax credits for EVs and solar projects are permanent, and there's no real budget impact because of the way that we did this math. So I'm less worried about this because I tend to agree with most of what's in this bill. Like I do want tax cuts to be to go forward. Right. I don't want tax rates to snap back to where we were pre-2017. I think that would be pretty damaging to the economy. But the precedent they're setting by doing this kind of math is a little bit worrisome to me. It makes it a lot easier to pass unfunded bills down the road. And we already seem to be on a very unsustainable debt path.
Yes, there is. It's hard to articulate the full impact. I started getting into the real nitty-gritty of how sort of shady this maneuver is, but ultimately it comes back to what the point you made earlier. The idea of keeping these tax rates in place, and maybe let's play a Democrat-Republican. This was going to happen either way. Democrats in office or Republicans, these rates, the marginal income tax rates that we were talking about, there was not a lot of support to have them revert back to what they were supposed to be after the conclusion of 2025. For
90% of them. I think had you had Democrats win the White House, I think what you would have seen happen is maybe the top marginal rate would have gone back to 39.6%.
Possibly. But ultimately, the big crux of it would still stay in place.
Yeah, to revisit this, right, like most people that fall into the 12% bracket used to be paying 15.
Right.
That wasn't moving back.
22, it used to be 25%. 24 used to be 28%.
Yeah.
Those brackets
weren't going
yeah, they weren't going anywhere. So when I step back and look at it from that lens, this was going to get done one or the other. I don't agree with the accounting tactic either. I was trying to think of a household finance situation to explain it.
I don't think I can, because at the same time that they're saying the $3.8 trillion isn't happening, they're also extending the debt ceiling by $5 trillion to be able to pay for it.
Yeah, so I was trying to think, if you're a household that's you're adding $10,000 of debt to your household finances every single year, and then you go to buy a new boat, which is going to add more to that debt. Basically, what you'd be saying to husband and wife between each other, well, that $10,000 that we're running as a deficit every year, that was already in place. So this boat, it doesn't really...
It doesn't add quite as much.
It doesn't... The $10,000 we were already doing, that was already in place. So it doesn't really have the same impact. That was already there. We already were incurring $10,000 of debt a year. That was the best I could do, but that's not a perfect analogy for this either.
I think it's always just... I always have to check myself, because it's really dangerous when you just overlook the way something is getting done because you agree with the end result.
Right.
And that's where I land on this. Quick break. Wall Street Watch is coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Your Retirement Preparation Checklist. Mike, one of the items on this is to address outstanding debts, and by that, I don't think we mean pay everything off, but more make sure you have a plan for different types of debt.
Yeah, there's always been that real goal for I think a lot of retirees to have no mortgage when you get to retirement, and I still see people trying to accomplish that even if they might have a sub 3% mortgage, for example, and there can be some psychological benefit to paying off that piece of debt, but where it comes down to is prioritizing, hey, I might have a car loan, I might have a home equity line of credit, and while the mortgage could be the biggest payment, it shouldn't always be prioritized.
Beyond that, I also think it is something that you need to figure out how it fits into your monthly budget and whether you can continue to spend in the fashion that you've been spending, or do you have to make changes there?
Right. A lot of people use some rules of thumb when it comes to how much income they'll need in retirement, and those can be useful, but it all has to be customized to your individual plan. And the last thing you want to do is pay a whole bunch in taxes just to be able to pay down some debt that wasn't really a priority in the first place. And so definitely addressing your debt and knowing how to do that intelligently when you approach retirement is key and important.
The guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001. That number again is 800-393-4001, and the guide is titled Your Retirement Preparation Checklist.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are adding to their recent record highs as investors ready for a shortened holiday trading week, highlighted by a jobs report on Thursday. Trade's also back in the spotlight after Canada withdrew its digital service tax in an effort to move trade talks along with the U.S. And of course, we await developments on President Trump's big, beautiful bill for final passage in the Senate. Right now, the Dow is up by 0.3% or 127 points. S&P 500 is up 0.2% or 13 points, and the Nasdaq also up by 0.2% or 43 points. Russell 2000 is up about 0.25% higher. 10-year Treasury yield down by 1 basis point now, 4.27%, and crude oil retreating about 0.6%, trading just above $65 a barrel. Shares of Moderna up by over 2% after the local biotech company's experimental flu vaccine showed a positive response in a late-stage trial, opening the way for the standalone shot and a combination COVID shot. Meanwhile, the Justice Department settled its lawsuit challenging Hewlett-Packard Enterprise's $14 billion deal to buy Juniper. Shares in Hewlett-Packard are up by 13%, while Juniper stock is seeing gains of 8%. Elsewhere, both Bloomberg and The Information reported over the weekend that Meta has hired 4 artificial intelligence researchers from OpenAI to join its new super intelligence team group led by Alexander Wang. Meta shares are up by 1.5%. Bank stocks, including Goldman Sachs and Wells Fargo, are seeing gains after the Federal Reserve announced late on Friday that America's large banks cleared its annual stress test. Both stocks in Goldman Sachs and Wells Fargo are up by about 2%. And Disney shares rising over 1% higher after Jefferies upgraded the stock to buy from hold, where the investment firm said Disney's parks business is holding up well, and that the cruise revenue could jump next year when 2 new ships are launched. I'm Tucker Silva, and that is Wall Street Watch.
Canada and the U.S. were in the midst of negotiations when the president of the United States, President Trump, walked out of those negotiations on trade tariffs and where things will go next. In response, Canada has now dropped their digital services tax that was beginning to get collected, I believe, today or this week.
Today, yep.
So I want to start off with just where these taxes are coming from, because according to the Tax Foundation, there's some 18 countries that have now implemented digital services taxes. Canada is not the only one, and they are I think, somewhat logical response to American dominance in the tech space. That doesn't surprise me, but obviously hits American tech companies more than just about anybody else. So let's imagine for a moment that you are creating tax policy in Canada, I suppose. You do not have a whole lot of big social media companies headquartered in Canada. But whether you're Facebook, Google,
Amazon,
Amazon to some degree, but they have actual sales in Canada.
True.
I like to focus this on companies that just sell digital assets, digital ads, different types of things. Because effectively how Facebook makes money, and they are really clear about this, they have an acronym called ARPU, average revenue per user, and they break it out territory by territory. And so I don't know if you still can, but you could traditionally take a look and say, oh yeah, they make $17 per American user, 11 per European user, and you can break that stuff out. There wasn't a great way for European governments, for example, to easily make some tax revenue off of Facebook's advertising. Ultimately, where they would make some revenue, so if you're scrolling on Facebook and eventually you see an ad for a grill, and then you purchase that grill within the European Union, yeah, they're making the sales tax at that point, but they are not getting a piece of basically the revenue that Facebook's generating on that advertisement, because those dollars all come back to the United States. They're all conducted there. And so this was the digital services taxes was a way of saying, okay, this is the gross revenue that you are deriving from Canadian citizens, so we want a piece of that. And it was a 3% rate. And so these are being looked at pretty closely, mainly in these negotiations, because they're not a form of tariff, but they are a form of taxation that the Trump administration has deemed as somewhat unfair, and certainly mostly target U.S. companies. And so we will see where this one goes, if this has the power to really permanently drive some change here, because these countries have been coming up short. I would argue, hey, focus a little bit less on figuring out how to tax these companies and more on how to innovate so that you create the next Facebook rather than taxing ours. But they have been a big revenue raiser. They have been a big way of these countries trying to find ways to tax companies that don't really have a presence in their country without kicking them out of the country. And in the absence of it, I'll be interested to see where it goes. I was asked this question this morning is this a bad sign or a good sign for the negotiations? The fact that they walked out and now Canada's coming back to the table with this. And my conclusion was, I think this is actually probably one of the moves that happens in the 11th hour, right? Like in the fourth quarter of the game, this is when you walk out and drive for the hardest bargain. So I would say that I think this is indicative of a deal that does get done soon, not just the digital services tax. I mean, a whole negotiated trade deal with Canada rather than, we're about to blow this up and start at square one.
That's the way I viewed it too. Yeah, it was just likely a positive development to follow from it.
Yeah, I tend to think so, but we will see. An interesting, just similar story, because I was talking about tariffs generally and Canada specifically with a personal friend of mine who works, I'll just say they work in a sports manufacturing company based in the New England area. And they, surprisingly to me, manufacture most of their stuff here in the United States. They source materials from all over the world to manufacture their stuff, but they primarily do the actual manufacturing here in the United States for most of their goods, certainly all of the ones that get consumed in the United States. Because of the trade tariffs between the United States and Canada, their product, if shipped to Canada from the U.S., would face a big tariff. And that's the case for a whole bunch of countries right now. And so what they are in the midst of doing is, rather than expanding their manufacturing in the United States due to tariffs, which, is kind of the goal of these tariffs, is to say, hey, companies that are manufacturing overseas, we want you to bring that manufacturing back to the U.S. Well, they've already done so. And so what they're finding is, hey, if we ship our product to Canada or to Europe, we're going to face a big old tariff because of reciprocal, things that have been put in place here. We actually need to set up a manufacturing base elsewhere in the world or expand our existing ones elsewhere in the world so that we can ship. In their case, I think they were manufacturing or increasing their manufacturing capability in Thailand in order to ship to Canada and avoid tariffs, which is the exact opposite. I mean, we talked about this type of example over and over again of how tariffs just add weird complexities into the supply chains. But if they manufacture that product here in the United States and ship it to Canada, they're going to face a tariff. If that same American company goes and hires 15 new people in Thailand to manufacture that sports equipment and then ship it to Canada, they're actually far better off financially. And probably save on labor and a whole bunch of other things.
It's incredible to play it out that way. The counter argument would be that they are a unique example, right, of a company totally that unique. Does manufacture in the United States. That those are few and further between than the reverse side of that coin.
Yeah, but I don't know how you prevent that, right? Like, okay, do we give an even bigger tax credit then to those that do manufacture here to offset the effect of that? And, carrot and stick approach again, where, okay, we're going to measure the total percentage of your manufacturing base that goes on in the U.S. versus, I don't know how to address it.
Starts to make your head spin.
It does.
And then ultimately it gets back to your point before about, Canada or someone else developing this Facebook. The focus should rather be on innovation and productivity gains rather than making our head dizzy with tariff rates.
Instead of figuring out ways to innovate, we are figuring out ways to pay accountants and attorneys a whole bunch more money to obfuscate and get around tariff rules. So A+. Let's take a quick break. When we come back, we're going to be joined by Todd Lutzke from the law firm of Cushing & Dole and talk about their guide for the month of June. It's the last day of the month, last opportunity to grab it. We'll be back with Todd just next.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Joining us now is Todd Lutzke from the law firm of Cushing & Dolan, talking to us about their new guide for the month of June, Unlocking the Power of Irrevocable Medicaid Trust. Todd, thanks for joining us. Appreciate it.
Always a pleasure. Thank you.
So let's start with some basics, because I think most people that are listening generally understand that, hey, irrevocable Medicaid trusts can be designed to protect from a nursing home instance. But I guess operationally, how? Because I've also heard, hey, can't I just kind of gift assets away? Maybe I give my kids my home, and that also achieves some protection. Why a Medicaid trust?
Yeah, I think it's a great analysis, because the home is the biggest asset most people have, and they generally want to protect it. And you're right. Some people say, "Oh, the quick fix is give it to the kids now." Well, if you do that, you talk about irrevocable trust, and the idea anyway that people have in their head that somehow they're losing control or that they're giving up things. Well, just stop for a minute and think about the alternative, which is, imagine if I gave it to my kids. Do I have any control anymore? No, it's not mine at all. I mean, arguably, I can get thrown out. I can't sell it. I can't buy a new house with my proceeds. I can't, and even reserving a life estate. Oh, it's subject to the kids' creditors. I mean, why would I want to do that? And even if I reserve a life estate and keep the right to live there, there's still a lot that you're giving up control over by just keeping a little nugget to live there. When in reality, you could put it into one of these irrevocable trusts, and practically you're saying, how does it work, right? You could still live there. You don't have to worry about anyone ever throwing you out. You could sell it anytime you want to sell it, just direct the trustee. They're drafted in a way where you get capital gains tax exclusion, so they're income tax neutral. You don't have to worry about a kid having a financial problem while you're living, which is good for you and good for the child or the children. So just tons of reasons, tax-wise and creditor protection-wise and control-wise, that you would do an IRREV trust.
Todd, there's another misconception or just misunderstanding that I hear from folks all the time, because any type of trust can be designed to do a whole bunch of things. Avoid probate is a common one. Here in Massachusetts, estate taxes are another big one. What does the 5-year look-back period actually apply to, and what does it not apply to? Because I hear this one all the time, like, oh, I've got to have it in there 5 years for probate avoidance or estate tax avoidance. Cover that 5-year look-back window for me.
Yeah, and really important, because some people, going back to that house idea that you talked about earlier, Mike, right? The idea that you could give it to your kids and somehow avoid the 5-year waiting period. No, the 5-year waiting period applies all the time, right? If you give it to your children, if you make any kind of an outright gift to anybody, if you put it in a trust, any of those transfers is going to mean you got to outlive that you got to stay out of the nursing home for 5 years after you make that transfer. There are very, very few exceptions to when the 5-year rule doesn't apply, and they would only really be used when you're actually entering a nursing home last minute with no planning. So there you go, folks. Don't think that there's a quick fix that you can avoid the 5-year. It's pretty much included. But I will say that, this trust, this guide, it's the end of the month. If you've never knew whether or not an irrevocable trust is right for you or not, if you ever were unsure of it, in 30 years I've put together question, answer about how these trusts work. And that's what this guide does. And it explains the day-to-day activities, the trust activities, the protection benefits. When you're done reading it, you're going to know whether it's right for you or not. So if you're not sure, call and get it. 866-848-5699 or legalexchangeshow.com. It's the end of the month, folks. 866-848-5699 or legalexchangeshow.com.
Todd, great to talk to you. Appreciate it. Have a great 4th, and we'll chat with you in July.
You as well. Take care.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Paul, increasing mounting questions being placed on the Federal Reserve. Here's what it all is coming down to me. Will we or will we not see tariff impacts in prices this summer? Because the Fed has staked a lot of their credibility on the answer to that question. And not that they have definitively said, hey, we are expecting prices to go up in reaction to tariffs, but they have held off on interest rate setting policy. They have held off on cutting interest rates, making, cost of borrowing significantly higher for a lot of Americans. There's a lot of confusion. It's not as though they control mortgage rates, and who knows where those would go if they cut anyway. But mounting pressure on the Fed to say, hey, we're not seeing the effects of tariffs on prices to this point. How long do we wait before we wait for these things to show up? Because to this point, we'll get another CPI reading in a few weeks here, but I cannot point to a single reliable data point that tells me, prices are increasing as a result of tariffs right now.
No, it's a difficult situation that they find themselves in as usual. It's never an easy gig. But to your point, they're all else equal without the potential for tariff shocks on prices. They likely would have been cutting. I mean, they cut a full % heading into this year, late last year, and ultimately...
I don't think it would have been another, just to be clear there, I don't think it would have been another full percentage point.
No, just a quarter basis point cut.
I think they might have done something like in May would be my best guess.
But ultimately, they have hung their hat on this idea that there could be supply chain shocks, and as such, you would get a pass-through on inflationary price increases. And to this point, we're running at headline CPI year over year of about 2.4%. If you look at other inflationary measures, there really hasn't been a tremendous impact. And we were on with a journalist from Wirecard, the New York Times last week, where they were studying prices and just not seeing any sort of changes on some of those big ticket items that you normally would see price increases on.
And if the New York Times can't find it, then nobody's going to find it.
Exactly. And so the question remains to me, and I've brought this up before, is this a situation, and this journalist said the same thing, that talking with executives, that perhaps the Walmarts and the Targets, and you mentioned that personal anecdote earlier from the weekend, that companies don't want to be the first ones to get out in front and increase prices to consumers. So perhaps is this a situation where everyone's holding on to that rope for as long as possible, and does it break over the summer where you see price increases? That's what the Fed is staking its claim on, this idea that could potentially happen.
And it's really wild to me in terms of the order of all these things and where it leads us, because if you're negotiating in the Trump White House right now and you're taking a look at these tariffs and you're trying to measure the impact, stock market's at an all-time high.
Yep.
Fed is under pressure to cut. And you have seen no meaningful impact on prices by implementing these tariffs. I'm going to drive a hard bargain. Why wouldn't I? I'm going to continue to use this threat. They clearly respond when things get hairy, right? We're going to cover a story on immigration later. We're going to cover all sorts of things where the Trump administration has decided to back down in reaction to how these policies are being perceived. But on the trade and tariff side of things, I've heard a lot of bluster, but seen nothing in pricing. I'm going to drive that hard bargain. We've got to take a quick break. Markets are in positive territory, likely heading for new all-time highs today. We'll cover that and a whole lot more next on the Financial Exchange.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing and Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange on the last Monday of June here as we head into the July 4th holiday week. As a reminder, shortened trading week here with markets closing at 1 p.m. on Thursday and then all day Friday. It's Mike, Paul, and Tucker with you on a morning where we've got the Dow, S&P, and NASDAQ all positive to the tune of about 0.25% in early trading. We do have the Senate making its way through the big, beautiful bill over in D.C. here and attempting to move that thing forward. Generally speaking, we are looking at a lock-in of tax cuts, but, there's a little bit of something in there for everybody. We're seeing some temporary cuts on taxes on overtime as well as tips, some more permanent tax cuts for seniors over the age of 65 who will not be getting an exclusion on their Social Security but will be receiving a larger standard deduction on their income. So in effect, wiping out some of those Social Security taxes. Cuts to Medicaid, cuts to a bunch of solar programs, wind programs, green EV tax credits generally. Any other big highlights for you, Paul, from the bill? I mean,
bumping up the child tax credit.
Child tax credit will be affected. So, Paul's going to have 3 more kids, as we know. And so we will see. We're in the midst of this kind of vote-a-rama here in the Senate, or will be soon, and we will see what gets in, what gets out. One of the biggest things that we took up in the first hour of the program is that they're effectively the Republican-led Senate is waving a magic wand here to basically say that the effects of this bill are null and void or nil on the overall budget because a lot of the tax cuts that they're proposing are already law. They're just renewing them. Normally, you would look at this as some $3.8 trillion added to the deficit over a decade. They're doing some pretty interesting math over there in D.C. at the moment, so we will see where it goes from here. And that interesting math is drawing the objections even of some Republicans with, over the weekend, Rand Paul voting against this bill, as well as a few others. Anything else catching your eyes in markets at the moment? Bond prices are pretty stable at the time being. We've got oil prices down again by about 1%.
No, it's a relatively quiet week in terms of economic activity. Really, that jobs report on Thursday is the one that we'll be most attuned to this week. Pretty light in terms of earnings and things like that.
Then let's turn over to the housing market. We talk a lot about it because pretty darn interesting to people. Everybody needs a place to live. And Barron's has a piece. A shrinking housing market means upheaval for buyers out there. I don't know that every article that's written about the housing market these days is so dramatic. How does the shrinking housing market mean upheaval for buyers these days, Paul? Are you seeing upheaval in the housing markets? I'm not sure I am.
No, I mean, it's this idea. This comes back to an issue that's gone on with Compass and Zillow in terms of the battle for listings and access to viewing available homes online. But I feel as if, Mike, just to step back to your earlier point, there's always this focus on trying to make a huge call on the housing market at one direction or another. It seems like everyone wants to be able to say it's going to be, this 2008 situation of huge drops and, bargains everywhere, or to the contrary. I mean, we did see, to be fair, a significant run up post 2020 in house value. So that was a period of time. But oftentimes, if you look at historical trends with the housing market, it kind of just putters along, 2 or 3% increase every single year. And that's where we seem to be trending to me at this point in time. I can't see a huge catalyst for change on mortgage interest rates. To be fair, that's a very difficult area to predict where they're going to trend. But it seems as if they're going to stay in a tighter range this year. We've talked about the inventory issue for shows and weeks on end, and that isn't any clear resolution there. So I just don't know if I can get behind any huge shakeup because all of the variables that you would measure in terms of inventory, interest rates, and the amount of people out there looking to buy and sell, not a huge change, really.
Yeah. One area it is making a bit of an upheaval would be in the markets related to housing, right? So you do have Home Depot, for example, closing on a big purchase, an attempt to draw their contractors in closer. You have Compass, you mentioned, buying up a bunch of smaller brokerages because, in spite of what you might say for the housing market itself, which, again, while this differs a lot on a state-by-state basis, on a national basis, we're not looking all that different in terms of inventory than what we looked like in 2019. The big difference is pricing is way higher and interest rates are way higher. So the eligible buyers to make those purchases are not showing up in droves. And for whatever reason, mainly probably because there's been no big economic push for this to happen, those sellers just aren't in a rush to sell. By and large, they're not cutting prices as much as most would think, and they're just kind of holding on at this point. But when you talk about brokers or brokerages that make all of their money on the transaction of a piece of real estate, it's been pretty rough for them, and so Compass has been out there buying. One piece that I found fascinating, when you guys go and look at real estate listings, where do you go?
Probably Zillow.
Zillow, okay. Yeah. I do, for whatever reason, I like Redfin. I've always been on Redfin, and so I just am used to the website. I don't know why, but I use Redfin. But Zillow is way more popular.
Yeah.
The unique visits to Zillow in the first quarter of this year were 2.4 billion unique visits. I think in a whole year, how many real estate units get sold in a given year. It's a fraction of that. And so what Zillow is experiencing is kind of this moment where they're almost a social media company. I mean, I don't know about you guys. This is a hobby for me. I went on vacation this weekend out to Western Massachusetts, out to Lenox. I was browsing real estate listings the whole time I was there. I'm always curious. It's weird. It's a weird hobby, but I'm apparently not unique in this one. No. I send it to my wife. Everyone's like, "Oh, check out this place that we can't afford. This is pretty cool." That is pretty interesting to me. By the way, I took a look at, according to SimilarWeb, which is like a website ranking tool that looks at traffic. In the month of May, Zillow was the 15th most popular website in the world.
Wow.
That puts them on like weather.com status. They had almost as many unique visits as the New York Times during the month of May. That is a huge, I think, opportunity, quite honestly. Again, I don't use Zillow very frequently, but the only advertising I've ever seen on it is for realtors.
Big connection with realtors.
I mean,
but I'm trying to think of other ways you could diversify
furniture
revenue.
Like, how many people are looking at houses because they like the design aesthetics of a certain house and sharing it with a group in that way, shape, or form? Like, the way it's being talked about these days, people are like, hey, you should create Zillow more of a social media platform where you can directly share these things with
landscaping,
yeah.
pool companies,
loans.
Are loans existing advertisers on there? Or
I just saw a loan one, yeah.
Okay, yeah.
VA loan.
All right, so they're moving into new areas, but I mean, that type of web traffic in a market like this where there are just not very many buyers is indicative of something else to me. It's people are looking at this site not while being serious about buying real estate, which I find fascinating and also a remarkable business opportunity for Zillow to try to take advantage of. Recent history would suggest that maybe they're not so good at that. Remember, this is the company that attempted to buy houses in what was one of the best buyers markets out there in like 2019 and 2020, and then lost money on it and had to close the unit down. So they do not have a great track record on this stuff. But I mean, this is your bread and butter, guys. You are attracting visitors to your website. They are sharing that stuff with their user group, with their friends. You got to capitalize on that.
But if we were to play it the other way, let's say you're the furniture company that you're mentioning that you want to advertise. Is that the best way to allocate your advertising dollars? If you're a pool company, you're a landscape company. Is it to allocate that to Mike Armstrong, who's really just kind of on a pipe dream, or I've done the same thing too. Well, what if we move down to North Carolina? You know what? You go down that road of sort of what would look like. It's like the exercise you go through when you buy the lottery ticket up. Yeah. This is the first thing I do with it. Is that a serious qualified buyer? I don't know. I'm just sort of kicking that around. Do they get the return on it as much as they do with the realtor side, which that's where Zillow really makes his money, is hooking up listings with realtors?
Yeah. I guess I don't know.
Yeah.
I guess I genuinely don't know, but I would think by and large you've got a oftentimes wealthy demographic there, and you would end up advertising against stuff that can in no way be deemed controversial. Right? Like, you go on YouTube, well, I might accidentally advertise next to some jihadi video or some terrible, terrible thing that I don't want my advertisement to appear next to. You're not going to get that on Zillow.
2.4 billion is a lot of eyeballs on there to go after.
It is a lot of eyeballs.
Text her to the number 617-362-1385. Simply put, I browse Zillow all the time. So fun.
Yeah.
Fun.
I genuinely, like, I use it in the same way that I think people use Facebook frequently, which is just escapism, just entertaining value. So interesting place that they find themselves in. But yeah, the housing market, if you're looking for that deal of the century, still ain't there.
Have you seen, speaking of social media, do you follow Zillow Gone Wild?
No.
Check it out. It's very interesting listings.
Okay.
Mainly just these like massive mansions with like amazing amenities. But Zillow Gone Wild is a fun,
I'm looking for the
fun
opposite.
follow.
I want to find the opposite of like toilets and kitchens, just horrible designs on Zillow.
Oh yeah,
listings
no, you get some of that.
Okay.
You get some of that too.
Some of that too.
It's not just like luxury things.
Yeah,
There's also
I'm in.
very interesting homes.
Let's take a quick break. When we come back, we're going to be playing a little bit of trivia here next on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange, and today is Michael Phelps' 40th birthday. Phelps is the most decorated Olympian in history, as he holds the record for most medals and most gold medals. So, trivia question today: How many gold medals did Michael Phelps win in his Olympic career? Once again, how many gold medals did Michael Phelps win in his Olympic career? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Swimmers have such an unfair advantage with that gold medal.
They do. Category. Jerks.
No, just like Usain Bolt, he can't win like 7-8 different races, stylistically, like Michael Phelps can.
Question for each of you: What were your first summer jobs, or what types of summer jobs did you guys
Camp
have?
counselor.
Camp counselor. That's pretty solid. Tucker.
Valet for a car dealership service department.
Like it.
You?
Yeah. Primarily office copy boy.
Yeah. I've done a lot of that too.
But in either case, New York Times
copies.
Copies and
Mike Armstrong.
Copies and coffee, baby. I was good at filing too.
I've got this paperwork that's been here since the 90s. Who wants you to sort through it?
Yeah, precisely. So according to the New York Times, the rite of passage summer job is disappearing, and I'm kind of surprised by this. And it goes against what I had been saying about the labor market, because we've been focusing a lot recently on the difficulty that college grads are seeing out there finding a job. And to be clear, the unemployment rate for 20 to 24-year-olds with a college degree is sitting around 2014 levels, which I consider high. Like that sounds pretty darn high to me, given the state of the labor market in 2024. And according to the New York Times, the unemployment rate now for teenagers is sitting around 13%. Now, the unemployment rate for teenagers is always pretty darn high. Like, it never gets terribly low. They're not always looking for work. But I'm looking at the data series here from the St. Louis Federal Reserve, and it is sitting right at 13.4%, which is a high for the May time period, going back several years. I will also say, however, that compared to post-Great Recession, this is nothing. So in May of 2010, the unemployment rate for 16 to 19-year-olds was 26.5%. So there's a different story going on here. I'm not saying this doesn't exist and the youth unemployment rate has dramatically increased. Here's why I'm kind of surprised by all this, though, is we've been talking at length about the number of deportations, the number of people who are working in generally lower wage jobs that can no longer do so because of either threat of deportation, family members being deported, or just crackdowns generally. I would have thought that would have opened up opportunities for American 16 to 19-year-olds. You are not seeing that so much. One of the explanations that's given here, though, is a drop in travel this summer.
Sure.
There is being reported a pretty significant drop in vacation travel to large portions of the country, especially from Canadians and Europeans coming here. And so maybe that explains some of it. But I don't know. This just doesn't really fit within the narrative that I had been spinning.
I would have predicted the parallel to, I believe it was the summer of 2021, where we're a year post-COVID, where I believe it was difficult for international visas to be obtained for summer work. And I thought we'd have similar sorts of parallels to that, where you have these people from other countries that perhaps are more hesitant to come over to the United States because of some of the immigration reform. And as a result, I remember in that summer, it opened up huge opportunities for the demographic that we're talking about here, those younger workers. There were signing bonuses and other sorts of efforts really to try and get these teenagers to work. And here we sit, 3 or 4 summers later, and we're in a point where it seems like it is a tighter labor market. And I'm just surprised by that, because as much as perhaps international tourism is down, still much of the domestic tourism seasonally in the Hamptons or Cape Cod or other areas of the country seems like it's still there and out in force.
So again, this one is very different from the college grad story, because again, the severity of what we've experienced recently, again, the unemployment rate for 16 to 19-year-olds did not even get below like 20% until 2014. So for us to be sitting at 13 now is not really absolutely shocking. It's just a bit surprising to me given where we are with other things. I guess I keep going back to the same thing to blame here, right? If we're going to bring up AI and automation as a source of blame for for college grads that are entry-level positions, white-collar jobs there, that might be happening in those blue-collar summer jobs too. I mean,
But it's like the local ice cream store, the bagel place. Like, do they?
The local ice cream store.
Are they going to?
The last time I
in the
checked,
software?
the Needham train station ice cream shop did not have an ordering kiosk last time I checked, and the line was also usually pretty long. So
there's ice cream there?
I don't at the train station. Yeah.
I didn't know that.
I'm
gonna go on the train more.
Yeah. There's like 4 Needham train stops. So I'm gonna make you guess which one it is, but there's a top-notch ice cream shop right at the train station in Needham.
Did not know that.
They do not have an ordering kiosk. They only started taking credit cards like last year. So, there should be plenty of those jobs as far as I'm concerned.
It was so hard in 2010 to get a summer job. Flashbacks to that.
Let's take a quick break here. When we come back, we'll have the trivia winner for you next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but irrevocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Your Retirement Preparation Checklist. One of the items on that list, reviewing your investment portfolio. And Mike, I think one of the biggest mistakes I see people make is making no changes to their investment portfolio right up until the minute they retire and then making a drastic shift.
Yeah, I mean, look, that drastic shift can sometimes be called for, but only if the preparation hasn't been happening over the years. And that's where having a checklist in place and really addressing these things well ahead of retirement is the most comprehensive strategy and probably the best planned strategy that you can have out there.
And when we talk about an asset allocation in retirement, it's not just, hey, I'm X years old, I need to be, situated in a certain fashion. It's much more taking into account your income needs over different time horizons, any other big spending items that you might have, and obviously risk tolerance and time horizon for retirement. Big difference between retiring at 60 and retiring at 70.
Well, and the tools can change too, right? Even if you were in a tool that made you automatically more defensive as you got closer to retirement, like many 401ks do, it might not be the best distribution tool for you when you're actually ready to pull that trigger, stop working, and then ultimately begin taking withdrawals out of that 401k. And so really important to review this piece by piece.
Our guide this month is titled Your Retirement Preparation Checklist, and the way to request it is by calling 800-393-4001. Again, the guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in positive territory, adding to their recent record highs as investors ready for a shortened holiday trading week, highlighted by a jobs report on Thursday. Trade also back in the spotlight after Canada withdrew its digital service tax in an effort to move trade talks along with the U.S. And of course, we await developments on President Trump's big, beautiful bill for final passage in the Senate. Right now, Dow is up by nearly 0.5% or 210 points. S&P 500 is up 0.25% higher. NASDAQ up by 0.2%. Russell 2000 is edging 2 points higher. 10-year Treasury yield down by 1 basis point at 4.26%. And crude oil retreating 1% today, trading at $64.82 a barrel. Moderna now up by over 3% after the local biotech company's experimental flu vaccine showed a positive response in a late-stage trial, opening the way for the standalone shot and a combination COVID shot. Meanwhile, the Justice Department settled its lawsuit challenging Hewlett-Packard Enterprises' $14 billion deal to buy Juniper. Hewlett-Packard shares are up by 13%, while Juniper stock is climbing over 8% higher. Elsewhere, Home Depot said that it is buying GMS, a building products distributor, for about $4.3 billion as the retailer moves to draw more sales from contractors and other home professionals. Home Depot shares are pulling back slightly, while GMS shares are up by 11%. Oracle is up by 5% after a recent filing showed a cloud deal that would add over $30 billion annually, and Disney shares rising over 1% higher after Jefferies upgraded the stock to buy from hold, where the investment firm said Disney's parks business is holding up well and that the cruise revenue could jump in the next year when 2 new ships are launched. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: how many gold medals did Michael Phelps win in his Olympic career? That would be 23 gold medals. Trev from Revere, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Trev. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, wealthy Americans are not feeling wealthy. Wall Street Journal has a piece, a few different interviews that they've done, as well as some surveys that are out there on just talking to the wealthiest Americans that are out there. And to be clear, what we're talking about here, if you are making $130,000 per year or more, that puts you in the top third of income-producing households. And when you go ask those people, hey, how do you feel? Do you feel wealthy? Only about 26% said that they were better off than a year ago. That's the about lowest level since the depths of the financial crisis back in 2009 in terms of how people are feeling. This was a survey that was conducted through June. What do you make of a study like this? Is it? I feel like I could put a positive slant on this, which is, Americans are always trying to find that next buck and improve their lives more, and that's maybe uniquely American, maybe not. The other side of this would be that we are horrible savers, not very good with our personal finances, and therefore might be able to pull in $300,000 and still struggle financially.
I would say that it's probably more that for the former that you said, that there is always this competition to keep up with the Joneses and sort of, try and get to the next threshold of wealth. But also, to me, it's a commentary on the affordability piece that we've talked about the housing market a lot, where yes, the 7% 30-year fixed mortgage, historically, there are many listeners who I'm sure would tell us that their first mortgage was much higher on a percent basis from an interest rate perspective. However, the affordability pairs the two things together. The fact that home prices in many areas have gone up 50% over the last 5 years, and you have borrowing costs that are twice as high as they were at that initial start in 2019 or 2020. Those two combinations combined make it so that it is more challenging for those people to afford in those wealthier areas. Look at the greater Boston area that, we broadcast out of. It's really dang competitive to buy a house around here. You are up against people that are mentioned in this article, whether it's IPO windfalls, executives who are making huge top dollar money, and the school teachers, in the greater Boston area. It's just harder and harder for them to be able to keep up. The one statistic was mentioned here: 90% of households that have the top 10% of income people who had the top 10% of income nationally, 90% of them owned households in 2022. That's a heavy percentage, 9 out of 10. But that rate was 95% in 2001. It's not enough anymore to be over that 130,000 in some areas.
I keep going back to, there is no dollar threshold that magically makes you financially well off.
That's so true.
Because I'm sure you've met with it too, but I go back to the scenario, right? I have definitely met people earning more than $500,000 a year
who feel like they're tight,
who are objectively tight.
Yeah.
How do you have this much debt when you are pulling in this much? And it's private tuition, it's sports, club sports for the kids, it's summer camps, it's these things that are incredibly expensive and ultimately optional, really. But it all comes back down to, good versus bad savers, and where that all goes. We have a piece this month from the Armstrong Advisory Group, and it's not directly to raising kids or anything like that, but it's all about retiring and putting together that checklist. And obviously it's the last day of June, so I'm going to talk about this one a little bit and give you the details on how to get your copy of this guide. But we put together what we hope to be a pretty concise checklist that you can go through piece by piece. And it's not that you'll be able to say, oh yeah, I now have gone through each one of these and fully understand all of them. But it's more to say, hey, if there's any of these you haven't gotten a full understanding of, you might want to seriously consider doing that before you pull the trigger on retirement. Addressing outstanding debt is a common one there, Paul. And I think there's this real push from pre-retirees like, God, this would just be so much easier if I didn't have my mortgage. But there are pitfalls there, right? You speak to somebody and it's like, oh yeah, finally got rid of that mortgage that I was paying. It's like, yeah, but you were down to all the principal on a 3.5% interest rate. In the meantime, you have a 9% car loan that's sitting out there. What was truly better for your overall financial situation? I know that was a big monthly payment that we knocked off the list, but is that the best way to address your outstanding debt? There's, I think, a couple of ways to think about your retirement date, right? And I've had this conversation with folks, but do I have a retirement age? Or do I have a retirement lifestyle goal? And you can have either. Like some people, it's, no, at 65, I've been breaking my back for this job. I am done at 65. The second I can get on Medicare, this job is over. You just tell me how much I can spend, and I will make my life work with that. For others, it's, hey, paint me a picture of the lifestyle that I want to have. How much savings do I need to do between now and retirement in order to make that happen? And both are perfectly reasonable scenarios, I think, but you have to kind of do the work and answer, which one am I trying to accomplish here? Our new guide for the month of June, as I mentioned, it's your retirement preparation checklist. It's just a great way to take a look piece by piece. If you're, I would say, anywhere within the next 15 years of staring down that retirement number, hey, have I thought of all of these different considerations before I go and pull that oftentimes permanent trigger of walking away from my income source? Give us a ring at 800-393-4001. We'll hook you up with your free copy of our new guide for the month of June. Again, it's the last day of the month, last opportunity to get the guide, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul and Tucker.
What?
Is this Financial Times? Who's writing this? Bloomberg? Market Watch. Market Watch wants to know, how much would they need to pay you to have another kid?
Let's see.
It's more than $1,000.
More than a grand?
The Trump policy.
The MAGA account is what's going on there.
It's $1,000 isn't going to get you too far.
No, we've talked a lot about this, but I don't know what the magic number is to actually increase the birth rate.
$150,000. I would consider it. I'm not even kidding.
500.
Market Watch asks this question of, can a baby bonus really make Americans have more kids?
No.
A baby bonus in and of itself, probably not, because to that point, it'd have to be pretty substantial to move the needle for most people.
I'll go further with Mike. Definitely not. Not probably not. Definitely not.
I guess the question that Market Watch raises is, like, there probably are some families there where, yeah, if you throw a few grand at them, then, like, yeah, we're going from 7 kids to 8 kids, and that's a meaningful impact to me. My point would be, if you actually are going to try and develop policy that is going to increase your birth rate, prepare for it to be outrageously expensive, because it is probably not just a cash bonus. It is probably a combination of subsidized child care, additional paid leave for mothers and fathers. It is going to be very, very costly, and I don't know that society is willing to pay that cost to try and increase the birth rate. There have been a number of studies that have looked at this in other countries, and half measures don't get the job done. There have been a few success stories, but they've done the things that I've talked about. It's like, oh yeah, free childcare for everyone up to a certain age, massively long paid leave, and just a societal shift towards, yeah, we're going to really address this issue. In those cases, there have been some success, but it's a lot of money.
I wasn't even aware that there had been successes. I know South Korea's tried and failed on some of these initiatives, and there's some other countries out there that are escaping me right now that have tried.
It appears that AI is just going to be cheaper.
I just...
as sad as that sounds, AI might be cheaper.
There's also this society, it's really not anyone's business to make an incentive one or not. I just don't know if you can change societal views on it. It's people's individual decision, and those have shifted dramatically regardless of the cost, that I don't know, even with all the investment in infrastructure, can you really change the way people view things. And it's ultimately, it's up to anyone's
So what you're
own
saying,
decision.
Paul, is you want to bring back policies of shaming people who don't have kids.
No, I'm not.
Is that what you're...
Not touching that thing with a 10-foot pole. Anyone can do whatever the heck they want.
You can quote me on that.
You can quote me on they can do whatever the heck they want.
Let's take a quick break. When we come back, a bit of stack roulette, and I promise not to put more words in Paul's mouth.
Quote me on that.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Summer in New England is here. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. usvi.com. That's visit usvi.com.
Paul, I've got a problem with some reporting from the New York Times.
All right.
It has nothing to do with accuracy or political bias. The title of the article is Gen Z, it turns out, is great at saving for retirement. And the oldest Gen Zer is 28 years old. There was nothing nice written about millennials until we all turned like 40. What is happening here? We're not allowed to compliment 28-year-olds on their financial discipline. Like, does this actually prove that the millennials were the worst generation?
They were just perhaps the whipping boy for
man,
everyone.
that is disappointing. Apparently, though, according to some actual data and not just interviews, Gen Zers are actually saving money. They're being financially disciplined. They're putting money into their 401ks. According to TIAA-CREF, a report from one of the large retirement service providers. What do we call TIAA-CREF? Yeah, something like that. The 20% of Gen Zers are saving for retirement at this stage. They're also contributing to 401k plans at higher rates than millennials did when we first entered the workforce, according to a 2023 Vanguard study. So I don't know what it is about these loser Gen Zers who don't spend their money and instead save for retirement. Who even cares about retirement? It's like 60 years away, guys. Don't worry about it yet.
YOLO.
They are not YOLOing.
That's because they're just
putting
stuck
money into their 401ks.
You know how we put the negative spin? They're just stuck looking at their phones. They're not out there and doing stuff, and being active, and
so we
getting
can
out
still
there and
call
enjoying
them,
life.
we can still call them losers, but they're not financially irresponsible losers.
Financially responsible losers
Got
is what we'll call them. But the auto enrollment feature, all jokes aside, the auto enrollment feature on 401ks I think is a fantastic
might be a contributing
feature
factor
that
here.
contributes to some of this.
They probably don't even know it, though. They're like, oh, I guess.
The other what's a pay stub?
Direct deposit? What?
The other piece is, if you look at the market history too here, millennials are coming out in the time frame that's post 2008.
Sure.
Perhaps more fears about the market. You've seen over the course of the last, 10, 15 years, a remarkably strong. If you go back 15 years to 2010 on, you've seen almost very little financial turmoil relative to what we saw in 2008. Perhaps that is part of that equation as well.
And apparently more people are also contributing to an IRA than millennials did. So of those who contribute to an IRA or Roth, 41% were under the age of 40 in 2022. This they're trying to attribute to internet-based education on retirement accounts, which, again, I can buy. The caveat there being there is, from what I have seen, 3 to 4 times bad advice on the internet for retirement savings and general financial advice than there is good. So it's interesting that you need to parse through all that, but maybe Gen Z is getting pretty good at that too.
The Roth IRA is something that I wish I knew about when I was younger. Maybe that is being disseminated across other podcasts.
I'm guessing it
out
is.
there.
I'm guessing
would
it is
think
because
so.
like it wasn't a piece of our parents' financial literacy, right?
Right.
It didn't exist when they were in the workforce initially, and so we weren't taught that as that age demographic, whereas Gen Z probably is being taught about it. It's probably the most popular planning technique out there right now.
Quick one here on more people are willing to go into pet debt, even though it's going to cause them a great deal of anxiety.
Tell me this is Bloomberg again telling you to kill your pets. Who wrote this piece?
I believe this is Market Watch here.
Right.
But yes, it is Market Watch. People are finding that, according to a recent survey, 68% of couples without children are willing to go into debt to take care of their parents if not their parents, that too probably, but their pets, if a medical emergency arises, with the average couple claiming they were willing to spend an average of $5,000 for pet treatment. And I got to tell you, Mike, I get a lot of calls for withdrawals from clients on pets and expenses that arise there. It's a big sum in certain circumstances.
It is very, very expensive. I don't know the last time I walked out of the vet for less than $100. Quick break for the rest of the day. Dow, S&P, NASDAQ, all in strongly positive territory. We'll have a full recap for you tomorrow. Have a great rest of your day, folks.